Our next story is about America, specifically America's debt. It stands at $36 trillion. That's the debt, $36 trillion. That's what the US government owes. 36 trillion. It's a ticking time bomb. And according to the IMF, it is ticking louder than ever. The IMF, as you know, is the International Monetary Fund. It has issued a direct warning. The US must get a grip on its ever-increasing debt. Those are the words of Geeta Gopinath, the Deputy Managing Director of the IMF, and her warning comes at a critical time for the United States. Just recently, they suffered a downgrade. Ratings agency Moody's has downgraded American debt. Earlier, the US had a credit rating of AAA. That's the gold standard, AAA. Now they've been downgraded to AA1. And the reasons are the same: soaring government debt, rising interest payments, and government spending without any checks. Like I said before, the US owes $36 trillion. That number is rising fast. And instead of hitting the brakes, the US is pressing the accelerator. President Donald Trump wants sweeping tax cuts. He is pushing a new bill, a bill that is more than 1,000 pages long. It is called the One Big Beautiful Bill Act. That is the official name. The One Big Beautiful Bill Act. It's so Trump. It proposes a wide range of cuts to income tax. Economists say that this would widen the deficit. This bill would decrease government revenue substantially by as much as over $4 trillion. This is projected over a period of 9 years, and the markets have already reacted to this. Stocks have dropped, so has the value of the US dollar dropped. This was during early trading today. In fact, throughout this week, the markets have been wobbly. Investors are nervous, not because of wars, not because of another pandemic, but because of America's own balance sheet. The rising debt is the biggest cause of concern. It entails the growing cost of servicing that debt. Higher interest rates mean higher payments. Right now, the US is borrowing money just to pay the interest. Needless to say, this is not sustainable. Some experts say it's worse than it looks. Billionaire investor Ray Dalio paints a grim picture. He was among the few who had warned about the crash in 2008. And now Ray Dalio is concerned about America's rising debt. He says the credit ratings only tell one part of the story. The real danger is the falling value of the dollar. It had a rough start in 2025, and in the last 5 months, the dollar's value has fallen by over 7%. If this trend continues, investors would suffer more losses, particularly those who bought US government bonds. Their returns would shrink. And the US is not the only one here. Across the board, debt levels are rising. Back in April, the IMF had raised red flags about this as well. It said global debt is heading for dangerous levels. In fact, the IMF expects public borrowing to jump further. And if this trend continues, listen to this, if this continues, the world's debt pile would be bigger than the world economy by 2030. That is worse than the pandemic, far worse than the 2008 financial crisis. So the IMF wants countries to focus on reforms and reduce debt.
We want to see countries acting decisively on reforms, so you don't borrow your way out of debt. You grow your way out of debt. So when countries have that growth potential enhanced, then they can also reduce that vulnerability.
So which countries are vulnerable? There's the US, of course. Its debt levels stand at 123% of its GDP, but some countries are doing worse than the US. Japan is at a whopping 235% of its GDP. That is the debt level, 235% of their GDP. Singapore, 175% of the GDP. Greece, 142%. Bahrain, 141%. And Italy's debt stands at 137% of its GDP. So Japan's debt levels as a percentage of their GDP are far worse than the United States. But there's a basic difference. The US issues the world's reserve currency, the dollar. When the dollar weakens, the world feels the impact. A weak dollar means higher prices, higher risk for global markets, and less confidence for in the US leadership. The consequences are not theoretical, they're already showing, with ratings downgrades, market volatility, and growing global unease. But the world's largest economy is not addressing any of these challenges. It seems to be living in denial, and right now it is adding fuel to a debt bomb, a bomb that no one is trying to defuse. At Firstpost, we are choosing to hold on to accuracy. That means we won't always be first. We may not get you your breaking alert, but what you will get is what we owe you, and that is the truth. Verified, checked, and cross-checked. We rely on sources and verified ones. After all, that's what separates a journalist from a loudspeaker. But sometimes even we miss a beat, and when we do, we will tell you. Like yesterday, we ran visuals from a registered news agency. That visual turned out to be fake, so we are taking accountability. And from now on, we will cite the source of every visual, every picture, every video that you see on Firstpost will have a source mentioned. That is our commitment to you. We will wait, we will verify, we will ask again, and only then will we tell you. No noise, no panic, just the facts. Because right now, that is what the country needs most.